Well, hello there, everyone. Welcome to another edition of Tip Tuesday. This is Jeffrey Nance here with you. Today, our topic is the danger of buy and hold. So, in previous episodes, we've talked a little bit about how, when done at the right time, buy and hold can actually be a way for you to make money as long as you eventually sell. So, today we're going to talk about two of the dangers of buy and hold. And in some ways, they are certainly related. So let's just define what buy and hold is. It seems like that we kind of need to start there. So, buy and hold is pretty much a long term investment strategy where you simply go out there, purchase a stock, and then you plan on holding that stock for an unspecified amount of time. And it's not necessarily in and of itself a terrible strategy. The problem with this strategy is it's buy and hold. So imagine that I had a painting and I held that painting and I let it increase in value and it increased in value and it increased in value. And then I just sat there and just watched it. So it just hung in my house and just kept increasing in value. But I didn't do anything with it besides just kind of go by and look at it and maybe wave to it and be like, hi, painting that's increasing in value. And then over time, then, I die. And so now we have four kids and we got to decide, all right, well, who gets the painting? So the painting did nothing for me as far as potential profit was concerned. Has it increased in value? Yes, it could have increased in value substantially. Did I make any money off of it? No. Why? Because you only make money when you sell. So I'm still holding it. I die. Okay. Well, then it gets passed on to another kid. Well, which kid? We got to figure that out. And are they supposed to hold the painting and pass it down to the next generation, or is somebody at some point going to sell this thing and actually make some profit on it? So, I mean, we can hold this painting for generations to come, but nobody's going to make any money off of it until they sell it. So, one of the dangers of buy and hold is that most people who buy and hold really have no plan to sell. Therefore, they have no real plan to actually make money. That's kind of the biggest problem. So it's not that the stock won't increase in value. It's not that the strategy in and of itself is bad. It's that you are in this stock to make money. So at some point, you do have to have a plan that you're going to say, I'm going to sell this stock and I'm going to sell it at this price. Now, for those who have been through our courses, we're not necessarily going to take that same approach, that whole, well, I'm just going to sit around and wait and, see what happens and then sell it at some point someday. We're going to have more targeted sell points in mind so that we are actually going to make money. So the tradeway system is based on buying, but then selling, obviously, because we're planning on making money with these trades rather than just holding and passing down, and holding something for a year, 2 years, 5 years, 10 years. We don't even know, generations. It's just like without having a plan. We want to have a plan. Our system is based on having that plan and then executing that plan. As Jared says very eloquently, plan a trade and then trade your plan. And that's what we're really trying to do, is to have a plan in mind and then to do what we predetermined to do. And therefore buy at a low price, sell at a high price for those strategies that involve that. The other real danger of buy and hold is that if we hold, stocks do lose value over time. Now, primarily, they go up more than they go down. So if you hear a financial manager say, oh, just hold it, they always come back. Well, historically, the S&P, the overall market itself, yes, historically that has come back. And it's come back each time it's gone into a bear market. And in fact, each time it's gone to the previous high or created a new high, which is certainly, validates what they're saying. But what about individual stocks? Do they always go back to the previous high or do they go higher? Sometimes the answer is no. Now, many times they will. They will go back to the previous high. In fact, many stocks will double in value in a new bull market. You go, Jeffrey, that sounds fantastic. So I could just sit there and buy a stock at the low or near the low, and then it might double in value in the next bull market. You're going to see many stocks that would do that. So, where does the danger then of buy and hold come in? Well, we're going to take a look at some stocks today. And the time period we're going to be looking at is really from about November of 2021 until today. So we're talking about, basically a 7 to 8, maybe, getting close to a 9-month period here. And what I want you guys to really see today as we go and look at some of these stocks is how much some of them have fallen. Now, the S&P itself, the overall market has dropped about 20-ish%. And so that's technically a bear market, but we're really just kind of floating, trying to get out of a bear market, back into it, out of it, back in. And so it's just kind of hanging out in a relative range here for the past several months. In the midst of that, though, what you might have missed is how many individual stocks dropped substantially more than 20%. In fact, several of them have dropped in half. We're going to look at a few of those today, and I think you're going to be very surprised if you were a buy and holder, what this might mean for you and how much money. Now, unrealized gain is technically what it would have been, because you could have sold, you could have made X amount of dollars, but because you held, now it's worth considerably less. So you say, Jeffrey, I may not have lost anything. But when we look at it and say, well, you could have sold for $300, now it's $150, that's going to be a little frustrating, right? I mean, especially if you had like 1,000 shares, you go, oh, yeah, well, my stock, I bought it at 100. I could have sold it at 300. I could have made, $200,000, but I'm still holding it. It's worth 150. Well, I'm still up $50,000, but you know what? That doesn't sound the same as being up $200,000. And again, what's the danger of buy and hold? It's not that the stock didn't increase in value. It clearly did. You bought it at 100. It was at 300. Problem is now it's at 150. So what are you going to do? You're going to wait, see if it gets back to 300 and just be like, oh, instead of doing this twice, now I can at least do it once. Or are you going to see it at 300 and be like, oh, I'm not going to sell now because now it's at 300. It's going to go to 400 or 500. So if you don't really have a plan, you're going to be sitting there just going, I don't know what's happening. So let's go out here and let's look at some of these stocks. And now we're not going to look at a ton of them here, but we're just going to look at a few. And it's going to be, I think it's going to be eye-opening for you guys to be able to see this. So we'll just go look at a few that I think are really noticeable here. And it's going to be shocking. All right. So here we go. We'll bring this up. All right, so I just want to go up here to some that you guys probably recognize, some names that you're probably familiar with. So the first up here is Lululemon. All right, so Lulu got like super hot. In fact, I'm going to zoom out just a bit more so you can see how hot Lulu was. Okay, so everybody kind of seeing here. So from March 2020, which was the end of the COVID bear market, or basically March, April there, this was a $150 stock. Made it all the way to 400 in about 6 months. I mean, that's just a massive bull market run up, $400, and then it dropped, okay, got down here to like 275. But what I really want to focus in on now is where we were in November. So in November, this stock was at around 475. So now imagine if you were late getting into Lulu. So you didn't buy it at 150, you didn't buy it at 250, you bought it at say maybe 350 or 400, and you watched it and you went, oh sweet, let's just say you got in October, you got in around 375, you watched it go up to 400, 425, 450, 475, you were up $100 a share, guys. You're probably ecstatic. And then this happens. Boom. Boom, 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 boom. Whoa, 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 whoa. And now all of a sudden you go from 475 down to 300. 475 down to 300. That's $175 difference. 475 to 300. That's a pretty massive amount of money that is not in your account anymore. It recovered, but then look what happened over here. You got down to as low as 250. So this is a $475 stock that basically since November lost half its value. 475 down to 250. Now, as I mentioned, there has been a slight recovery recently. But guys, if you bought up here at 375, you are not enjoying it dropping down to 250. And you're sitting here now trying to figure out, okay, well, I hope it goes up. Well, what if it makes another move down? What if this bear market isn't really over? What if this bear market keeps dropping? Okay, let's look at another example. This is NVIDIA. All right, almost 50. Boom. Below 150. That was over $200 per share. 350 down to 150. So this stock lost over half its value. All right, this is another one you guys are probably familiar with. It's Meta. It's what we used to call Facebook. 350. Whoa. 160. 350 to 160. Facebook lost over half its value. So if you're a buy and holder of Facebook, you've lost half the value that you had in your account since November of last year. All right, and now let's show an extreme example. All right, so I'm going to go down here to one called Upstart, which is an interesting name for this company. Upstart. In November, but even let's go to October, it was a $400 stock. $400. You guys know what it was yesterday? $26. This stock has dropped from $400 a share to $26 a share. Can you imagine having that much value just go out of your account, and then you're sitting there going, wow, I'm just going to buy and hold. I'm going to buy and hold. This stock was a $400 stock. There's no way it's going to get that low. 350, 250, 200, 150, 100, 50, 26. Yeah. But you're out there going, there's no way, $400. I can't be losing this much. That's the danger of buy and hold. Upstart is a great example, and there's a few more out there like Upstart that have lost that kind of value, that they've lost 60, 70, 80, 90% of their value since November of last year. The danger of buy and hold, guys, it's not that it won't come back. It's that you've missed a great opportunity to sell and take profit and then turn around and buy at a much lower price. And remember, if you want to make more money, the key is to buy low and sell high. So buy and hold in and of itself is a good strategy. You can make money buying with holding, but you've got to be connected to this understanding. If I buy, I have to sell. Okay? If I buy, I have to sell. I can't just simply be a buy and holder. I've got to be a buy, hold, and seller. Otherwise, I could get involved in a bear market, and I could see my stock drop in half, or in a worst case scenario, I could be in something like Upstart, where I lose 70, 80, 90% of the value that I could have made on this stock. Well, there you guys have it. The danger of buy and hold. Can I make money buying and holding? Certainly. Are there some dangers to buying and holding? Absolutely. Now, could these stocks recover? They might. But wouldn't you rather be buying them at the low price rather than holding them at the high price and watching them drop? Well, That's the danger of buy and hold. It's not that we can't make money off of it, but we do have to be committed to selling at some point and not holding and just watching it drop and drop and drop, just thinking, oh, it will recover, because it may be quite some time and I may have lost quite a bit of value before that recovery actually happens. Well, that's our tip for today, guys. Be aware of the dangers of buy and hold. You can make money, but you can also lose a lot of value too if you're just simply going to buy and hold without any plan. We'll see you guys next time.